What connects Credit Suisse in Switzerland and Yes Bank in India? Two big banks, both collapsed under the weight of poor governance. And today, these scandals are taught in classrooms from Delhi to London. Corporate governance isn't just theory, it's the reason companies either survive or collapse. Examination tip: always start with a strong definition. Corporate governance is a system of rules, practices, and processes by which a company is directed and controlled.
Hello, I am Dr. N. Sriram, holding PhD with specialization in business management and a certified management accountant from Australia. I am also holding a practitioner status from Chartered Quality Institute, London. I conduct classes for undergraduate and postgraduate students based in India and overseas. With vast professional experience gained working at a Swiss MNC based out of Geneva at the director level position, I integrate traditional teaching with real life examples. I am also a faculty in World Economic Council based out of New Delhi. Having successfully taught, trained over 500 professionals who have gone on to take up leadership positions in various companies. My aim is to make today's students future leaders of tomorrow.
Corporate governance is the bridge between law, ethics, and management. It shapes how boards operate, how CEOs are paid, and how companies are held accountable. In the UK, courses like Southampton, Mang 3021, and Dungy BU 41002 emphasize board structure, executive pay, and global governance models. In India, universities like Delhi DSC 6.2, Christ Bangalore, and Madras University highlight SEBI regulations, the Companies Act, and Indian case studies. So, whether you are in Southampton or Delhi, Chennai or Bangalore, corporate governance will appear in your syllabus and exams. Exam tip: link theory to practice. If asked, why does governance matter? Mention both global frameworks, example Cadbury, OECD, and Indian regulators, SEBI, and Companies Act 2013. Credit Suisse was once a trusted Swiss bank, but years of poor risk management and repeated compliance failures were ignored by the board. Executives still received bonuses even as the bank collapsed. By 2023, regulators stepped in and UBS took over Credit Suisse in an emergency rescue. The lessons: even a 167-year-old global bank can collapse overnight when corporate governance fails. That's why UK universities like Southampton teach cases like Credit Suisse to show how corporate governance links directly to risk and strategy. Exam tip: when writing about governance failures, always structure your answer: board failures, risk oversight, regulatory action. This clear framework gets full marks. Now let's turn to India. Yes Bank was once the rising star of private banking, but behind the scenes, reckless lending, hidden bad loans, and weak governance brought it down. Audit committees failed, independent directors stayed silent, and leadership pushed growth at any cost. By 2020, the RBI had to step in, restructure the board, and bring in SBI to save it. The key lesson: in India, governance failures can wipe out even the fastest growing banks. That's why Indian syllabi like University of Delhi's and Madras University Bachelors of Commerce include Yes Bank as a case study in their governance modules. Exam tip: for Indian cases, always mention Companies Act 2013 and SEBI regulations. Linking the scandals to the law shows examiner level understanding. If you want to learn how to write a perfect exam answer on Credit Suisse or S Bank, or how to analyze any governance scandal in 3 simple steps, join my tutorials. The link is in the description. And I want to hear from you. Should I break down Adani, Wirecard, or the PNB scam next? Comment your choice below. And don't forget to subscribe, because corporate governance isn't just about exams, it's about understanding why businesses succeed or fail.